Today, we're going to be doing that technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and NVIDIA. And then we might actually go look at Microsoft and Google since they did report earnings. But first, we have to talk about who talks tomorrow. Okay, guys, so Wednesday, October 25th, right? We get a lot of data tomorrow. None of this is, too significant. I think the overall thing that we want to pay attention to is what is Fed Jerome Powell going to say after the market closes tomorrow? That is going to be very interesting. And the reason I think it is going to be very interesting is because tomorrow we do get that GDP growth rate, okay, the quarterly. And the reason that I'm really putting some emphasis on this, I mean, normally GDP is kind of cut and dry. It's just because we're going to see a possible, increase of almost double since the last time we got this. So we could actually see a 4.3 or 4.0, whereas the previous was 2.1. So it will be very interesting to see how the market reacts to this, whether they see this as, strength, and we are going to see, more strength in stocks into the end of the year, or whether they read this as bad news. And we're going to see those yields jump because we are getting a higher growth rate in a scenario where we should be seeing things backing off. So it will be very interesting. So these are the two things that I'm going to be paying attention to over the next couple of days. Okay, now on the SPY, we were paying attention to this wedge. And overall, what we were saying probably a week or two ago up in these areas was we are expecting, this to start to head down. And the reason that we suspected that up here was just because the Qs actually were coming into the top of its wedge, and we're going to look at the Qs next. But right now, as far as the price action goes, you are getting indecision days. Yes, we did get a little bit higher than yesterday, but we weren't able to hold the price above that. The good part for this, okay, is that we are taking back the 200 as of today. Maybe if both of those companies, Microsoft and Google, actually give some good earnings, we can see this start to head upward. But I still believe in order to see that bull run into the end of the year, right, for this to actually go up and not just be another, lower high or something in the grand scheme of things, we would need some good news, as in pausing from the Fed. And I really, really think that that is a very high possibility because no one expects it's going to happen. And with rates and things, at least over the past 3 years, we can see that most of the time people are getting this wrong. Okay, so when everyone suspects they aren't going to pause, they pause. When everyone suspects they are going to pause, they raise. So right now we are seeing that start to come up, and we are going to look at that in the overall, yields that we're going to touch on towards the end of this video. Something that did look a little bit better, I would say, not necessarily, indecision at this point, would be the Qs, okay? So this is what kind of told us at that part that I was talking about in the SPY. That's why we started talking about, hey, we're probably going to test the, bottom of this wedge that's forming. And you can see the Qs actually tested that level as well. So now we're starting to see some buyers from there, and that's very good news. And maybe we can see these divergences down here start to play out, right, on the MACD. Now, the overall thing that I want you to pay attention to is if we get too excited, right, and we get outside of these purple lines here, this is your weekly range, right, priced in from the options. If we do that as of tomorrow, we could see some, rejection from the 50 or something like that. Overall, I just want you to pay attention to bottomings, okay? Like not necessarily like these reactions, like actual physical bottoms, okay? So let's zoom out for a sec. And let's just go all the way back to, say, down here where we confirmed a solid bottom. Look at this price action on a daily, okay? We go down, we go up, we stay up, we go up a little more, we go down. All I'm trying to point out here is most of the time we do not necessarily completely V-shape, right? Most of the time, even a V-shape, this could be considered a V-shape, right? We come way down and we go up. That's a V. But a lot of the time when we do touch lower levels and move higher, we do like to come back down towards those levels before extending again. So if we do start to extend too quickly, I will be a little sus on this, right? But if this does actually start to turn around because we do have all these divergences and we get that good news, then I'll be convinced. But until we get some good news from Fed Jerome Powell or some kind of pausing or something like that, I'm not necessarily buying this bounce at this point. We can get a retest and get rejected one more time, and then maybe we get that move. Overall, we just want to pay attention to these weekly ranges, right? As far as tomorrow goes, we could actually see this extend up to there, and I would just be a little bit on the worrisome side if you are trading throughout the week, if we get above those numbers. And then if we do, it's the same for the opposite. So if we do break down from these levels, look for us to find some buyers somewhere underneath or maybe right at these weekly expected moves. On Apple today, I am going to give you that thumbs up one more time. So give yourself a big pat on the back if you were subscribed and you found this helpful, because we've been talking about, this purple zone here for quite some time, okay? But overall, in the most recent time, right, in the last week, we were talking about a full red closing bar, and that was what happened last Thursday. And we can tell that when we do get that closing bar, I stated that we will most likely go touch the 200 or at least test the bottom of that purple zone. I overall like this purple zone, and the fact that we can look back a little bit and just see how we struggled to close beneath that zone in the past. And therefore, if we do get some kind of closing bar outside of this zone, then that's when we can look for a test of some kind of, this trend here of our wedge here. Okay, the bottom of our wedge could get tested, but the same stays true if we do start to break above this zone. You can see that if we break above this zone right now, we would be getting, above all of these moving averages. And that's very important. But right now, those can be seen as resistance. So if this move is continuing to go up and we do get some rejection from there, we can, still pay attention to this purple zone and see if we do close outside of it. So I just want you guys to be paying attention to rejection at these moving averages if that does happen. And then if we do break outside of this purple zone, we do have some levels down in here that we could find some buyers, okay, on Apple. In order for Apple to extend to higher levels, right, in order for this wedge to play out to the upside, we are going to need some good news. So we're hoping that we get some kind of Fed pause, because no one's really seeing that coming at this point. If we do measure this move out, we can give you guys some kind of price target today for fun, right? We can actually see Apple get above 200 if this fully plays out. Now, we are going to run into resistances along the way. It's not going to go up in a straight line, right? But we can look forward to that if we get that good news. Now, when the Fed does pause, right, we don't want to see something break in the system, because if they do pause, most of the time in history, when they do pause, right, we see it flatten out and then something breaks in the system, and that forces them to actually lower rates. And it is the lowering of those rates that actually causes the dramatic selling to start and the recession to set in. Now, Tesla, this doesn't look like the best bar, but we can give ourselves one good thing to take away from this. We took back the 200. Okay, so we are getting a reaction, but is this reaction just going to be some kind of retest at our moving averages to go down one more time? Like I said, these bottoms don't necessarily just go, oh, one day we touch the bottom and then we go all the way up, right? So we want to be paying attention to, if we do get some rejection, maybe we can pay attention to this 207.42 again, and maybe we find those buyers once again at that level, and then we can extend higher. If we do start to break below and close below, not necessarily 207.42, but I'd say this low at this point, then you are going to go make a new low. And where could that new low be? Most likely it's going to be somewhere in this like bundle of price action here. There's some buyers in that area, right? So we actually could see kind of in this whole zone here is open, but you notice that is a very big zone. So be very careful when you're trading Tesla, okay? Amazon, we did get that crossing, right? And, we did talk about how we do not take calls out when we get that red bar on a daily. So the momentum to this could be to the downside, but it is switched over, and now you get that green bar. So we are in a state of, we're kind of not necessarily knowing exactly where we want to go. It looks like we are seeing a little bounce in the post market, but we are coming up into the top of our wedge here, and we can get rejection from those levels. Overall, on Amazon, the thing I would like to say is I'm not too worried about seeing Amazon come down to these levels. And if we just kind of like blow this up a little bit, we can see a little bit of a head and shoulders forming, right? So if you just look, maybe here's your left shoulder, here's your head, and then we're creating some kind of right shoulder. This is our base. So you can see that we have potential here to break down. It's not saying that we have to break down. It's just this is most likely what's going to play out. Do I think this full measured move will happen? No, I think that Amazon is pretty strong at holding up at that 200-day moving average. But I'm just telling you that even though it does look like we are starting to bounce from these levels, that we are heading into those moving averages on a lot of stocks, and these stocks can break down pretty quickly and go to those 200-day moving averages. And then at that point, we can say, hey, if we are seeing some kind of pausing or something like that, on Amazon, we'd be approaching that monthly expected move, right? So we could see a good reaction from that level. Now, one stock seeing some good strength is NVIDIA. Okay, NVIDIA is seeing that strength, and we've been talking about this head and shoulders, but right now we were talking about it possibly getting some kind of lip before that happens. Maybe that's what this is right here. But I still believe that we have potential to get some rejection from this level, right? Because we have a ton of people who probably bought into this move, and this level right here might be where they would like to, maybe not necessarily get out of their position, but break even on a position, right? So we could see that another dip down into the actual neckline before we get that big reaction. Overall, I mean, the main point of all this is we're going to need something, some kind of pausing, some kind of thing from the Fed to tell us that we can head to higher levels before that can actually happen. As far as right now, if we do not get any of that information and we keep trickling up, if we continue not to get that information, it could be a sign that we want to start to break down again. And we will update you if that news comes out. I do pay attention to almost every stock. I have ADHD, so I pay attention to a lot of stocks throughout the day. But overall, what we can see on Google here is it looks like right now those numbers weren't very good. So it's actually a green earnings. So this is interesting. I would love to dive into it a little deeper, but that just takes up a lot of time. So maybe I'll do that for next episode. But right now we are seeing a pretty significant dip, right? 5% coming out in the post market, down 5%. That's pretty big. But you can see here, we've been creating this wedge, right? So we're getting this wedge, and this is kind of a reversal pattern for us. So we could see this start to break down. Overall, I'm not terribly worried, but you can see how these Bollinger Bands continue to be pretty tight on the daily. So we see those starting to bend back up. Maybe this is going to hold up at the bottom of this and we get another push. But we could also see this start to break down and find some basing out around that 200. Okay, so I don't want to be 100% fearful. It just looks like that news came out and it wasn't good. And I'm glad that I do not, trade stocks when they're around their earnings. The other side of that coin is Microsoft. And the difference with Microsoft was that we didn't necessarily get that daily crossing on the MACD, right? We didn't go below the center line, the 50 line here on the RSI. So we are still in positive territory on both, meaning that maybe this was just some consolidation to pop us a little bit higher. Overall, with earnings, it can always go either way. And that's why I kind of shy away from trading around earnings. But right now you are getting that pop. So it's going to be an interesting day tomorrow with Google kind of coming down really fast, 5%. And it looks like Microsoft's almost up 5%. So that will be very interesting going into tomorrow. Now, one good thing is that 10-year yield did come off just a little bit more. Now, the only thing that's worrying me a little bit is we are holding up right at that 9-day moving average. So I do use a 9-day in my trading strategy, and we are holding up above that at this point. As we go into TLT, you can see that we actually did cross on this daily, and we'll point that out, but we haven't seen that necessarily yet on the actual 10-year yield. So we will be paying attention to that, but if this does start to play out, we can start to see these divergences start to play out, okay? If these divergences start to play out, we could see a rapid sell-off, right? The rapid, decrease in these yields and see TLT get that big pop. On TLT, you can see that price point of 82.50 is what I was paying attention to, and it doesn't mean that we can't come right back down into that to gain some more buyers to then project higher, but at this point, you do have this divergence confirmed on the TLT, which I like to use TLT more than I pay attention to the MACD or RSI on the 10-year yield. But as of right now, you do see those investors starting to step back in TLT, and maybe this is going to be what pushes down those yields, which would be very, very good for the market. Now on TLT, I think it's important to know we have a bunch of gaps, right? We have tons of gaps. So I'm mostly paying attention to this level up here around 88.50. So that'd be this white line here. I do believe that if we do get too fast, right, we come up into the top of this little channel that we got going on, then we could see one more sell off, maybe creating some kind of, higher low or something like that, because markets do not base out on one day usually, right? It takes a little bit of time. So we could see this start to react upwards. Maybe we get a little bit bigger pop in the market with those yields falling off. And then maybe we come back down one more time before we get some kind of, hinting at a pause, right? So I'm looking for that pause. If that pause does come to fruition, I am expecting a decent sized bull run into the end of the year. Now, whether that bull run, gives us some divergence on, a weekly or something like that, or whether that bull run actually sets us up with a lower high, that's something we'll have to talk about down the line. But right now, we can see that those yields are coming off, and that is very good news for stocks. All right, and the last thing I wanted to talk about was the VIX. And in our last episode, we talked about the point where this little trend here breaks can be very important. This is a good signal that we actually want to start to come down, and maybe we start to see these divergences play out. Now, we don't necessarily have that divergence on the MACD here, but if I just blow up this RSI, you can see from this point here, we do have a little divergence, and from this point here, we have a divergence. So that would be with this high to this high, and that would be this high here to this high as well. So we do have divergences on the VIX, and these can kind of hint that we may see the VIX dropping and get some kind of pop in the market, but we want to pay attention to that. The crash side scenario, we just want to pay attention to that 200 crossing, right? The 50 crossing the 200 will signal that we do have some pain coming up, and I will be notifying you guys about that when that does happen, okay? But right now, we do see divergences playing out. We could see some kind of bounce in the market. So the overall takeaway from this video is I don't believe we are fully out of the woods yet, right? We're getting a bunch of earnings, and earnings can really fluctuate this market, and volatility is still up towards that 20, but it's good. It's a good sign that we're seeing those divergences start to play out. They're not confirmed yet, but they're starting to play out. We're coming below 20, right? So there are some signals out there that are telling me that we want to see some kind of bounce right now, but I believe that in order for that bounce to be a full run into the end of the year, we are going to need some good news with the Fed. We're going to need some good news around these rates, okay? I wish you guys all the luck in the world trading tomorrow, all right? Have a good night. Peace.